So let me ask you a question. If you could invest in a product that has a guaranteed no loss and then also can make almost double digits per year and then also carry a benefit in case you happen to pass away, would that be something you're interested in? A lot of people would. So let me give you an example. If you were to put money, let's say, into an IRA, and that IRA, you can put in a maximum of, let's say, $6,500 per year. So that's what you can put in. But let's say you paid in for 10 years. There's $65,000 plus any interest if there was any interest earned during that point. So let's take this scenario. So you paid in for 10 years at $6,500. If we take that same $6,500, and then we had a chance at more opportunity of growth with no risk of loss, and then we also had a life insurance policy for, let's say it came with $300,000. So let's say at the end of that 10 years, you happen to pass away. You put in 65,000. Let's say it grew to 75,000. That's the money your family would have in order they would have that $75,000. So now let me ask you the question. If you happen to pass away, the same $65,000 that you would have paid into an IRA, now all of a sudden you'd have, let's say it had $45,000 or plus cash value. Actually, at the end of 10 years, it's probably got close to $65,000 cash value, which is what you paid in, if not maybe even a little bit more, plus the $300,000. So your family situation, instead of leaving them $65,000 or $75,000 of the IRA, now you're leaving them $365,000. So which one obviously is a better investment for you? It's kind of a no-brainer, but you really need to kind of spell it out in that way. So here's the other example. So other great things about it. First of all, it's used with post-tax dollars. Therefore, it is not like your death. If you died, for example, there is the death benefit is no tax obligation to whoever your beneficiaries are. Okay, that's going to be the one. So big tax deal there first. There's no age obligation if you needed to take cash out of it. So, for example, like an IRA, you have to be a certain age in order to withdraw out of the IRA without any penalties. Not that case with the life insurance plan I'm talking about. Also, like I said, it's put in with post-tax dollars. So if you were to ever take money out of it early, or just because you needed money, let's say for a remodel of the house or whatever it may be, you can take that money out tax-free, or you could borrow against, and a lot of times borrow against at 0% against the life insurance policy itself. So, and the cash value that you've accumulated. So all we're doing is taking that money that we got told that we needed to max out 401k and we needed to max out this or max out the IRA because it's the best for us. And it's not necessarily the case. There are a lot of other programs out there that not only you can receive all this great cash back and actually grow investment wise, but also comes with the fact that you can have a death benefit in case something happened to you early. So let's take, for example, let's say you're 40 years old. You paid in it for 10 years. You're 50 years old. You're not an old man by any stretch of the imagination, but it happens every day, all day, especially what we've been through with COVID over the last couple of years. People that are younger are dying or passing away. So do they have life insurance? Or were they paying into 401k or an IRA or something to that effect that now all of a sudden it's not, they might have put in, let's say that same, 60, they put in 65,000, there's 75,000 sitting there, and that's all their family gets is the 75,000 because we didn't choose the investment part of a life insurance plan. Now, a lot of times you can, if you're great at separating your money out and investing the additional money, then a term plan is going to be a really good option for you as well. But if you're not really good at that, which a lot of us aren't, we just give us the one bill I got to meet and make that the investment bill. You can also make that with life insurance and end up way ahead on every scale. So something to think about when you're really looking at investing money and what is the best for you. A lot of times you can knock that out all in one thing, all in one policy. And with a life insurance policy that also can accumulate cash value and grow tax-free, or you can borrow against, that's going to be a great opportunity for you and your family. So I wanted to thank you for joining me on this episode of Doing Insurance Right. As always, if you could rate, review, or subscribe to whatever fantastic platform you're listening to us on, whether it be Google, Apple, Spotify, or any of the fantastic ones out there, I greatly appreciate it. And I look forward to seeing you in the next episode.